and augur very well for Bajaj Corp. So these are a bunch of stocks that they're extremely bullish on. But we've been talking about FMCG that's a key reason why we thought we're going to chat with Dabur's management. So FMCG, remember, continues to be one of the key beneficiaries of GST, which is going to be implemented from July 1st. JP Morgan is pretty overweight and bullish on Dabur. So let's bring on board then Sunil, the CEO of the Dabur, for a candid chat. Sunil, hi, good morning. What is the current on-ground sense and situation? Has demand now completely reverted to the pre-note ban era, or would you still say that there are some aberrations?
No, not yet. It's certainly better than the aftermath of demonetization. So January and February and now March are looking better than November and December, but we still haven't caught up with the pre-demonetization levels of September and October. So some way to go. I think we are inching up gradually, and hopefully in another 3 to 6 months' time we should be at the pre-DM levels.
Well, Sunil, real juice market share is now the highest among the peers. What are the factors that contributed to this growth?
I think it's really a better understanding of consumer preference with regard to flavors, and also a better management of supply chain. So we have the biggest array of flavors in the market. We also have the freshest product on the shelves. And we have multiple manufacturing plants, both in India and overseas, which cater to the Indian market. So I think we are able to meet the expectations of healthier beverages, which today the consumer wants, perhaps better than other companies. And that's the reason for our share growth. And this is despite the fact that we had a major supply dislocation around a year ago in our Nepal facility. But we've got over that, and we have regained all the lost share and gained some more in addition.
The rise in input costs are pushing FMCG companies to either hike prices or reduce quantities. How are you dealing with this challenge, and what steps are you planning to undertake?
The inflation impact is not serious. It's largely concentrated in coconut oil and sugar. Other material commodities are fairly benign. There was some uptick in prices of petroleum derivatives, but petroleum prices have come down, so there's not too much pressure there. What we have done to mitigate whatever little impact of inflation has been there is to remove the consumer promotions, that is, remove the freebies, cut them down, and not really resort to any significant price increases. We may do that if inflation continues, but at this point in time, we are able to maintain margins by cutting back on consumer promotions.
Right. Sunil, Ayurveda seems to be undergoing a big makeover because of rising competition. Being one of the pioneers in this space, how is it that you're coping with this immense competition in the sector, and what is it that you're doing to keep consumers from changing their loyalties?
No, we do believe that Ayurvedic products offer lasting value, and this is a belief which has been in the company for the last 100 years. So we are glad that this new resurgence in preference for Ayurveda is now cutting across demographic segments, including the youth. I don't believe this is a fad. I think this is enduring and will continue for a long period of time. And we believe that we will be big gainers in this whole makeover towards Ayurvedic products. So the competition is, in fact, a healthy sign of a category which is on its growth path. And if we play our cards well, we can be the biggest beneficiaries of this whole change.
So what percentage of your total business currently is from the food category, and which segment is going to be a key area of focus going forward?
Well, around 20% of our product is under the foods banner, as we define foods, which is beverages and culinary. Around the rest is around half and half, 40% and 40% each in personal and healthcare. We believe all three segments will grow, and the healthcare perhaps should grow a little bit ahead of the others. But then healthcare is more of a slower burn product line. So it'll take time for it to really scale up rapidly. Personal care is more scalable in the near term. But the long-term growth of healthcare is perhaps the most attractive as far as our portfolio composition is concerned.
Right. Sunil, discounts have always been a way for FMCG companies to lure customers into spending. But several players have now come out saying that the trend is not the same anymore. Do you agree with that? What kind of a shift have you seen in consumer behavior?
Well, I think we ran into a big demand bottleneck last year, that's the whole sector as a whole. And we were trying to mitigate it by giving extra value in the form of consumer promotions, especially since we were into a deflationary cycle, so it made sense to give a lot of promotions. Now the deflationary cycle is over, we're getting into mild inflation, so obviously many of these promotions are getting off the table. But long term, I think these are more tactical ploys rather than something which are embedded into the whole value proposition. So when you have a demand situation which is muted, or when you have competitive intensity which is very, very aggressive, you resort to consumer promotions. But the tendency for us at least is to take them off as soon as we can.
What kind of benefits are you expecting from the GST in terms of taxes being paid, and how do you think the proposed GST rates will change things for you?
Quite frankly, we don't know, because the slabs are not yet visible. It could be up, it could be down. We're hopeful that there will be a mildly positive impact in terms of the slab rates for us. But more importantly, I think it will favor organized players. It will make the supply chain more streamlined. It will remove a lot of supply chain bottlenecks. So that's really the value which we are seeking in through GST, and not just a small rate increase or decrease.
Right. What kind of plans do you, or rather have you put in place once GST is rolled out, Sunil? And how is it that you're optimizing your operations ahead of the rollout of GST?
Well, we've got a few scenarios painted. Depending on the nature of GST, we would be streamlining the whole supply chain. We will be perhaps cutting down the number of distribution centers. There won't be any need for so many distribution centers. There would be a whole lot of efficiency in terms of shipping and freight, because many of these border checkpoints and octroys and other taxes which mean a stoppage at the border would perhaps come off quite significantly. So overall, we are looking at efficiencies and better management of inventories consequent to GST, in addition to perhaps some upside in terms of taxation.
Okay, Sunil, finally, leave us with the growth outlook for FY18. Do you expect a big comeback in the first quarter?
Well, I think it may take a little bit longer than the first quarter, because there is a GST overhang, and if GST comes into place on 1st of July, then that would mean that we shrink inventories, and we perhaps that would have some impact in terms of sales in the first quarter, but that would be very temporary. So I'm seeing recovery come back from the second quarter, and perhaps strong recovery come back in the second half of the year.
Okay, Sunil, good speaking with you. Thanks so much for taking the time out and joining us today. That's the overall perspective really coming in from the management of Dabur, telling us how they're coping up for the GST rollout, what consumer trends and patterns that they're seeing at a time when there's just such intense competition in the FMCG or consumer space. Quick break. When we come back,